Good morning. I've had a few people asking me why uranium isn't performing with this big energy move. And we need to understand uranium a little bit better. So uranium, I'm uber bullish on uranium. Uranium is going to be absolutely pivotal in terms of additional energy and the energy transfer into a cleaner energy solution, and especially in terms of the energy requirements that we're going to need in 10, 20 years from now to fuel the sixth wave of innovation, which is AI and robotics and automation, all the data centers and everything else. We don't have anywhere close to enough energy that can be produced to be able to fuel the AI, robotics, automation, innovation cycle and the wave that's going to hit us over the next couple of decades. In order for uranium to perform, we have to first build nuclear reactors. And across the globe, we're going to be doubling the amount of nuclear reactors that we currently have. But the trick is, it takes 15 years from starting to build a reactor to actually it being operational. So uranium is a very long-term play. Now, a lot of people are asking, well, why are we selling off on uranium? And the fact is we're not selling off on uranium. The uranium commodity price is steadily making higher highs, higher lows, but it's going pretty flat. And since 2022, what we've actually seen is we've seen a 200% increase in the price of uranium, which is bullish, right? But in certain uranium stocks, and one of the stocks that I got asked about today was Deep Yellow. And DYL on the ASX has pulled back significantly. And like, why? Why are we losing? But if you go back and you look at Deep Yellow and you understand it, now I'm going to attach the chart to this video. When you understand what we're actually looking at, you'll see that Deep Yellow has run way ahead of the uranium price, built on speculation, built on people being uber bullish about uranium but not understanding the timelines. And in a risk-on environment, it's absolutely perfectly fine for speculation to drive equity prices fivefold, sixfold ahead of commodity prices, right? And that's what speculation does, and that's what buying pressure does. But when we go to a risk-off environment, those types of premiums aren't sustainable and they collapse, and prices of the equities come back towards the commodity price. And it comes back to what we call fair price. So if you look at the chart below, you'll notice that we're making higher lows all the time. But anybody that bought Deep Yellow, as this chart example shows you, during one of those risk-off periods, during one of the higher lows, would be really happy now. They would have a good smile on their face, they'll be well up in profit, and Deep Yellow is up 1,200% still since its 2020 lows, against a commodity price that's only up 200%. So even with the latest pullback, you're still really smiling if you're holding Deep Yellow, if you bought it at the right price, at the right time, when there wasn't a massive premium and the speculation hadn't driven price way away from the commodity price. So in essence, what you're wanting to do is you're wanting to buy equities when they come back towards fair value, when they're priced fairly against the commodity price. You don't want to buy equities when they have run really, really hard, because when you go into a risk-off environment like we had in the 2022 bear market, like we had in the 2024 pullback, and like we're having right now with oil price spikes creating a risk-off environment, those premiums over fair price can't be sustained. And that's why we're seeing pullbacks in uranium equities. It's not about the uranium price, it's about the equities and that lack of speculation, and how speculation can't continue to hold that massive premium when sentiment turns to risk off. So hopefully you've learned a little bit about this. Look at the chart below. It's pretty self-explanatory, and you can see the right time to buy. Ciao.